Welcome back, day traders. Sentiment on Wall Street is cloudy. It will clear up tomorrow after a speech by Jerome Powell. Until then, the risk-on mood is dampened and safe haven assets again win in favor with investors. InstaForex analysts are ready to share their ideas and to forecast. The benchmark stock indexes closed with the losses on Friday, and the Dow Jones shed 127 points, or 0.38%. The Nasdaq suffered the most due to a sell-off. The index sank by 1.59%. The S&P500 lost 1.09% to close at 4,136 points. The sell-off on Friday infected the market with pessimism, so the major indexes opened on Monday with a attach. All of them traded in the red in the pre-market. The S&P500 is expected to trade in the intraday corridor between 4,070 and 4,114 points. The sell-off on a Friday was fueled by the surprisingly strong non-farm payrolls, which aroused concern about further aggressive moves of the Federal Reserve. The U.S. economy added 517,000 jobs in January, excluding farm employment, much stronger than the projected 185,000 jobs. The unemployment rate dropped to 3.4%, the lowest level in 53 years. A robust revival in the service sector proved the remarkable resilience in the U.S. economy. In light of the strong data, traders are now looking for a balance between a lower recession risk and the hawkish Federal Reserve. Besides, mixed corporate reports do not help they evaluate risks. Apple shares rose by 2.4%. The company warns that its sales revenue will contract for a second quarter in a row. Still, iPhone sales are likely to increase because production at the Chinese facility has been back on track. Amazon shares plunged by 8.4% as the company said its operating profit could fall to zero in the current quarter, as savings from layoffs do not make up for the financial impact on chipping down of spending. Alphabet shares dropped by 2.7% after the Google parent company reported worse than expected revenue and sales. The S&P climbed 1.6% last week and the Dow Jones edged lower 1.5%. At the same time, the S&P remains not far away from a 5-month high. The Nasdaq closed in the green for 5 weeks straight, the longest winning streak since late 2021. Futures on the US stock indexes extended their fall on a Monday. Investors are in a wait-and-see mood in anticipation of a landmark speech by Fed Chairman Jerome Powell. And now market participants suppose that the US Fed will raise the funds rate above 5% and put it on a hold for a while to curb high inflation. This scenario looks realistic because the US jobless rate has declined to the lowest level in 50 years. The US military shot down the Chinese spy balloon over the weekend, and Beijing commented that Washington had obviously overreacted. The incident derailed the improvement in the US-China relations, thus weighing on the high-tech sector. Wall Street indexes opened the year with the gains amid recovery in the high-tech sector. And the bulls perked up thanks to a few market signals such as a positive dynamic in stocks in January. The golden growth pattern on the S&P chart and other shares which have printed new highs. Such signals are not fire sure and not the only factor to influence investment decisions. Weak prospects for heavyweights like Amazon and Microsoft as well as robust employment brought some uncertainty. Nevertheless, steady improvement in market sentiment in recent weeks reinforced the prospects that stocks have overcome the losing streak. The S&P 500 crashed by 19.4% last year, and now stock investors are alert to comments by Fed policymakers because robust hiring in January revived inflation fears. Later this week, Walt Disney and Pepsi are due to provide their corporate reports. All in all, analysts estimate that the aggregate profits of the companies tracked in the S&P 500 could decline by 2.7%. The US dollar has got a second wind as investors are shifting focus back to safe haven assets, having climbed by 0.3% intraday, and the index is now trading at 103.20. Bearing in mind global jitters and Powell's press conference, the intraday Canada for the US dollar index is determined between 102.90 and 103.60. On a Friday, the index grew by 1.1%. It recovered to 103.30 on a Monday, and it's still hovering at around this level. The strong labor market encouraged dollar bulls. As a result, the greenback strengthened to the highest level of mid-January. If the US Fed finds enough arguments for 2 more rate hikes to keep them at high levels in the long term, the US dollar will enjoy bright prospects. Investors have revised the outlook for interest rates for 2023, and now the market believes that the US Fed will raise the funds rate above 5%. Another catalyst for the US dollar's growth is escalation in the US-China relations after shooting down the Chinese spy balloon in South Carolina. An earthquake in central Turkey and northwestern Syria also added to the overall uncertainty. The Canadian dollar is losing ground due to the firm US dollar. The USD CAD pair rose by 0.19% in the pre-market to trade at 1.3420. The instrument is expected to trade in the intraday Canada between 1.3390 and 1.3480. Oil prices are trading higher today, having recovered by 8% last week. Brent futures grew by 1.6% and WTI futures gained 1.1%. Last week, market sentiment worsened by recession fears. On a Sunday, the managing director of the International Energy Agency that the reopening of China's economy is the catalyst for oil prices. The agency predicts that half of the global oil demand this year will come from China because of growing demand for jet fuel. In this context, OPEC and its allies will have to revise their decision to cut output rates by 2 million barrels per day until 2023. Despite the optimistic outlook for oil, higher interest rates put a lid on oil prices. Besides, the Russian oil price cap came into force on a Sunday. Crypto investors also share pessimism related to risky assets. Bitcoin retreated from its recent highs and is consolidating at around 22,800. Ethereum, Solana, Ripple and Litecoin are trading mixed. Following a tough challenge last year, cryptocurrencies are showing the green shoots of recovery. The crypto market, with its flagship crypto, Bitcoin, is showing the strongest resilience among other risky assets. According to blockchain.com, the value of all Bitcoins traded on the main platform surged by $151 million in the last 7 days. It's the biggest reading in almost 2 months. The overall trading volume of Bitcoin expanded by 13,130 tokens, the largest growth in 64 days. Nevertheless, it's too early to celebrate the bullish trend. If interest rates are actually raised lower than expected, risky assets will take advantage. In turn, currencies will extend their rally. Still, there is too much uncertainty. Bitcoin could make more efforts to consolidate at around $22,800 today. If it fails to settle there, the token could go down to retest $22,500. Alternatively, it could grow to $23,200. Good luck and see you online tomorrow!